day because today, for the first time, we will see SpaceX report earnings. The first quarter kind of is over after IPO, and everyone is now looking at the earnings call that will happen today after the bell. And of course, SpaceX being the most important company together with Tesla that we are covering, we need to ask the question, what happens in these earnings and what will actually matter for SpaceX, the stock? We know that the stock has had a hard time, as everyone kind of predicted. The stock only had one way to go down because it was a little highly valued and then went, of course, crazy, went all the way to 200. It had no other choice than going down at that valuation and at the current revenue and EBIT, especially given the nasty market. We have historically low valuations right now in the market on a price earnings growth level, but also even on EBITDA and PE levels. We are incredibly cheap. There was a massive market sell-off, and AI stocks, and SpaceX is an AI stock, got completely slaughtered. So these are all reasons why the stock is down. People are very concerned about unlocks coming, and the first one coming on August 6th, which is in 2 days. So shares are coming online, people sell more shares. So there's a lot of selling pressure and negativity around SpaceX, even though many understand the long-term pitch. So what matters in earnings? And of course, we have earnings expectations. We have people looking at margins. We have people looking at how much of this revenue they got in through compute from Anthropic and Google actually matters. But I don't think any of these topics is actually decisive. When you think about SpaceX, and we will focus today on one very specific question. When you think about SpaceX and their main business, which used to be Starlink, and Starlink is growing rapidly, it's an amazing business, but of course it doesn't justify a $2 trillion valuation and also not a $1.5 trillion valuation, at least not today. At current market sentiment, people would say, sure, I believe Starlink is going to grow. That is amazing, but let's wait a little bit, get the stock down to 900 billion or something while you're growing into it. And then once you hit certain price earnings ratios, we can grow the stock. That is the sentiment right now. So Starlink is not going to save anyone. If Starlink delivers everything they promise, it's just not enough. And so everyone is now looking at the other big thing. And no, the other big thing is not Starship. It's not orbital lift business, which is totally marginal compared to the other businesses. It is also not space compute, because space compute is not going to happen anytime soon. Now, I'm very bullish on this. I think it's happening earlier than people think, sooner than people think, but it's just not going to move the needle either because there is no cash in space compute right now. No one can sign any deals and pay any money for space compute for the next 12 months. And that means everything comes down to one decisive question. What happens to Colossus? And what happens to terrestrial compute build out? Because that was the big surprise, that we had a surprise revenue run rate coming in of $26 billion a year immediately through Anthropic and Google. 26 billion a year run rate, much larger than the entire SpaceX business and the entire Starlink business. So the question now is, and here you see Colossus, by the way, here's the amazing website. Colossus is this huge build out of compute in Memphis and New Haven, but also in Texas, as we'll go down, go into in a second. And so they've set records how fast they built this thing, and they lease a lot of it out. All of Colossus 1 is being leased out. Some more of Colossus 2 is being leased out to Google and Anthropic. And so in my opinion, it's very clear what matters in this earnings call. The only thing that matters just on a financial level for the next 12, 18 months, the only thing literally that matters for SpaceX, not space, but Earth. How much more are they going to build? They will be able to lease it out. Everyone knows that compute is the biggest constraint ever. Look at now the semis recovering, NVIDIA, Micron, everyone is up again. So we know that the world needs more compute, and we know there is no compute, and we know China has the energy, the United States has the chips, no one has both, and there's a giant problem building out that stuff, and Elon is pretty good at it. So whatever they will build, and they already made 26 billion run rate, if they build more, then they can make more money, and that will impact the bottom line immediately in a very massive way. In my opinion, that will be the central driver of the stock. So because it's so important, we actually did the math and went in at Pioneer Lands, our research team, and created a little bit of a brief, preliminary brief about the SpaceX AI compute build out. And I'm going to share this today with you and let you know what we think about this whole thing. And before we go there, I want to share this with you. This is UConn. I don't know UConn, but Gavin Baker responded. That is circulating on X. And we want to discuss today, is that complete bullshit, BS, or is there something true about this? What is circulating here? Total AI slop, by the way this is written, so not inspiring too much confidence, but per our channel checks, they're saying XAI's 2027 compute timeline is locked. That sounds like AI slop to me, but existing 1.5 gigawatts plus, so roughly 2.5 gigawatts plus 15,000 Rubin racks in 2027, 4 gigawatts is roughly 8 gigawatts. Okay, 8 gigawatts as compared to roughly 1 gigawatt right now. So let's assume very roughly, just for very rough math, if they make 26 billion with 1 gigawatt, with 8 gigawatt, they would make 8 times more, meaning $200 billion per year. So if this is true, if this is even half true, if it's 4 gigawatts, the stock should go absolutely through the roof, even with the most conservative valuations, because 200 billion at whatever margin you get, maybe 30% after depreciation, you would be talking still whatever, close to $100 billion. So even at a 20 price earnings ratio, you would be at 2 trillion, and you would not get a 20 price earnings ratio. You would get at least an Nvidia, Amazon, like 30 price earnings ratio. So you would be at 3 trillion, and very likely you would get whatever, a much higher earnings ratio, maybe double that. You had 6 trillion. So that's upside potential of 400% for the stock, 300% from here up. If this is true, so what we have to investigate today before the earnings call is, do we get anywhere close? Because of Elon and Gwyneth, what is her name? Gwyneth Shotwell? Gwyneth, come out today and they say, surprise, we are going to deliver 2.5 gigawatts additionally in 2026, as these people say, and then 4 gigawatts on top of that in 2027. It's guaranteed that the stock tonight goes through the absolute roof. And so it's worth a question to investigate, is there anything true about this thing? And that is our little presentation today. Let's go through it diligently. You will see we put a little bit of effort into this. This is, of course, preliminary. And then we can discuss your questions and see what happens. So if you go to pioneerlands.org, this will be available for citizens of Pioneer Lands, hopefully very soon by end of the week, to take a closer look. But here's the takeaway. Here's the takeaway. The takeaway is, when we look at permitting, when we look at what actually is the constraint here, we have currently roughly 1 gigawatt live capacity. We don't know if it's 900 or 1.1 or 1.2. There is some leeway here, but we have roughly 1 gigawatt live energy capability. It supports roughly 660,000 H100 equivalents. H100s are the NVIDIA GPUs that serve as the basic unit of compute here. Why is it H100 equivalents? Because we have a bunch of more advanced GPUs, the Blackwell 200s, 300s in there, maybe even Rubens at this point. But, you know, we count them as blended. And so a Blackwell draws more power and gives you more compute, but proportionally much more compute than it draws power. So you have to convert that into H100 equivalents. Now the problem is, just to go right into the problems with people talking about 2.5 gigawatts on top of that, or even saying it's 1.5 gigawatts right now and 2.5 gigawatts delivered this year. There's a problem. Because 500 megawatts of that 1 gigawatt roughly are under permitted. These are temporary turbines, 69 temporary turbines, gas turbines that Elon ordered to be set up without really having the permits. So when you put something huge like this live, you need permits. You have the government, and you cannot just build power plants the size of like supplying 1 million homes or 500,000 homes with energy. You need to ask someone for permission, literally permission, permitting. And they found like a hack, a loophole that was temporary gas turbines. But at that scale, they're not really allowed. And then there was a lawsuit. And now there's a settlement, not about money, a settlement how long they're allowed to run these 69 turbines before they need to be replaced by something fully permitted, fully grid compatible with full permits. And the result is they have time until mid of next year to replace them, and they have something preparing to do that. And that is the equivalent of roughly half of these 660,000 H100 equivalents. So they would lose, now we're talking about losing, not adding, lose half of their entire compute capacity. It would destroy the Anthropic and Google deal. It would cost them money. It would decrease their revenue if they don't get this done. So now they have a giant task carved out for them to just replace these enormous amounts of turbines with permitted ones. And this is all on track. I'm just pointing out the first obstacle here. It's already an uphill battle to just maintain your energy, not even to expand it. Okay. Now, let's go a little bit into the detail. I don't want to bore you too much, but here's the situation in Memphis and South Haven, right? This is Tennessee. And adjacent. And what you see is you have a 300 megawatt capacity fully grid connected. That is live. You have permitted mobile turbines, 12 units, 86 megawatts that are permitted. You have 69 units that are not permitted or under permitted, and they need to get removed in the next 12 months. Right? And then they have a South Haven, Missouri gas plant, or Mississippi. I always confuse them. Is it Mississippi? Americans. This is like a geography test. MS. Is it Missouri or Mississippi? Should I look it up? South Haven, Tennessee is next to it. South Haven, MS. Mississippi. We can also pull this up here. By the way, to do a little geography lesson. So here you have Memphis, Tennessee, and here's your South Haven. Here is the border, and here's Mississippi. Should we look up where Missouri is? Somewhere also here. Mississippi? No, it's not here. What? So Tennessee, Memphis, you have Arkansas here, and here's Mississippi. I've never been here. So anyway, that's what is happening. And that means this is a little bit of an uphill battle, but they have, this Mississippi gas plant in process. So this all looks good. Now, there is rumors, more than rumors. We know that because they're running into real problems here, building out the energy in Tennessee or in Mississippi, there are many, many problems, as you can already tell. They're trying to set something up in Austin, Bastrop, wherever, somewhere in Texas. And they're scouting out the sites. And in Texas, there are different provisions. You can actually set up your own stuff without too many permits. There is a Texas big loophole, right? If you build your own power plants, this is much easier to achieve than in nearly all other states in the United States. So what's the situation? They are now preparing to find the right sites. They're now preparing to actually get the turbines acquired. So here the bottleneck is not permitting so much. It's finding the site, and it's actually getting the turbines, which is also a giant problem because you can't get these turbines right now. So Elon was smart, as always, and bought APR Energy. So APR Energy is a company that basically leases out and organizes turbines, and they have roughly, here you can read it down here, roughly 30 trailer mounted turbines and 850 megawatts at the acquisition time of acquisition, since expanded past 1.1 gigawatts of capacity, this APR energy company, because Elon saw the problem. If you just go to a turbine producer, you will never get your turbine. There's like a 3, 4, 5-year backlog. You cannot get turbines right now. So Elon shortcutted, found that company that actually has the turbines and leased it out, and bought the company. Okay, blocks of 20 to 500 megawatts installed in 30 to 90 days. So these are mobile super turbines. So Elon was basically able to secure another roughly 1 gigawatt of turbines. And now if they find the right locations in Texas, they can get them there and set them up very quickly. But then you need the location, you need to get the chips in, and so on and so forth. So based on the current 1 gigawatt roughly installed, and the uphill battle in Memphis or in Mississippi to expand this, that is kind of the situation. Plus you have another 1 gigawatt in Texas waiting. And I think, knowing Texas, this could be a very likely shot, right? So you can make this happen. But then you're ending up at, let's say maximum 2.5 gigawatts, end of 2027 or mid of 2027. So forget 8. Okay. So we have already that. So what does that actually mean? We created a scenario analysis that is realistic, in my opinion. This is the realistic take when you take all these things into consideration. You know what I'm doing here for you guys. I'm leaning myself a little bit out of the window because no one says these things before an earnings call, because everyone is scared. I'm not scared. We did our homework. We might be wrong. I don't think we are too wrong here. So the base case for 2026, we're talking about this year, and then in a minute, I talk about next year. The base case is 1.6 gigawatts this year. This requires aggressive expansion, but realistic expansion. The bear case is 1.3. They're building out a little bit. Base case is 1.6 gigawatts. That requires already some magic that needs to happen, but I think that magic can happen. Okay. So that would mean they're getting to roughly 1 million H100 equivalents, up from 660,000. So a significant increase of 400,000. Okay, that's a realistic thing. And what does it mean for EBIT? And as you see, it has a pretty significant impact, right? Because it would basically create 5.4 billion additional compute EBIT. And that's nothing to snuff at, right? This is, or not additional in total, right? So that would basically mean we are adding $3 or more billion in earnings this year as a surprise, because that is not something analysts actually are taking into consideration. And when you look at SpaceX's financial, randomly adding 3 billion is pretty significant. EBIT margin here assumed 35%. If you ask why it's so low, it's about depreciation. These are all very expensive things. So once you take depreciation, because it's EBITDA, it's not EBIT. It's EBIT, not EBITDA. If you take this into consideration, 35% is pretty high. And it's pretty, you can get it higher, but, it depends on all kinds of little things. So if you get 3 billion in additional EBIT surprise, if you do the math, for Starlink to surprise up 3 billion in earnings is impossible. So it is a significant number. But what's more significant would be the 2027 number. So 2027, what are the scenarios? The bear case scenario here is they're just double capacity. It's basically what here the bull case scenario is for 2026. You see, 2026, 2 gigawatts is the bull case that we have that actually live end of the year. 2027 bear cases, we have this live end of next year, doubling capacity from July 31st. The bull case that I think is not realistic, by the way, our bull case is 4 gigawatts live. I shortcut the whole story. 4 gigawatts live end of 2027 is the maximum we can come up with. And that requires a lot of fantasies. And I do not believe it's realistic, to be totally frank. I think our base case is realistic. Maybe I'm a little more positive than the base case, but not much, maybe 3 gigawatts. I think 4 gigawatts, when you look at the situation, currently they have 2 gigawatts ready. They have a plan to get to 2 to 2.5 gigawatts. That requires perfect, flawless execution and to do things that no one else could even do. So that is already cutting them some slack. I think it's realistic that you get to 2.5 gigawatts, 2.4 to 2.5 gigawatts by Q3 next year. Could you get to 2.8 gigawatts end of the year? Of course, maybe, if you get there. That is important, and we will look into the numbers in a second, but that is what we can expect realistically. And I don't even think in the earnings call they will talk too much about the expected live capacity by end of 2027. So the 8 gigawatt case, in my opinion, is complete bogus. Complete bogus. The 8 gigawatts by end of next year would require to exceed our bull case that I do not think will happen by 100% to the upside. You have to consider, if you want 8 gigawatts, where does this come from? Look at the problems they have right now to get 1 gigawatt up. There are many problems. This is America. You can't just go somewhere and build giant, like 8 gigawatts are roughly 8 million homes being able to power, right? You can't just do that. And you see data centers all across the nation getting into big trouble, big pushback, because these are massive infrastructure build-outs that require all these permits. So even with the best Elon hacking capabilities that he already applied and now got kind of penalized for it, even with the best hacking capabilities and Texas here and there, where do you get the turbines? They don't. Elon pulled a rabbit out of his hat by acquiring APR. There are not many APRs. There's only one APR. So now where do you get the turbines? There are no turbines. Okay, so I think 8 gigawatts total bogus. I think 4 gigawatts not realistic either. It's just our extreme bull case. And don't forget, by the way, this is the big bull case. This whole thing we are discussing is the big bull case for SpaceX itself. That is why space compute is such an enormous deal. Because no one can build these things out. Maybe China can, but no one else can. So that's why everyone is rushing to space. And that will be the big story of 2028. But that story cannot pull the stock up right now. That's what I believe. So let's look at how much money this is to get a little bit more into the details. Long story short, the base case. And the financials here are pretty realistic. So some bulls want to like say, oh, they have 80% margins. Like you don't have 80% margins if you have to pay for power, for operations, if you rush the whole thing, pay all kinds of legal fees, and count the depreciation of this whole thing. We assume a 6-year depreciation schedule for the GPUs. So 35% is actually pretty good. If they get a 40%, maybe above that you can't get. If this all happens, the base case would put the compute EBIT to 20 billion in 2027. Now that's, again, not bad. You have to consider, and we'll get into valuations in a second, 20 billion means at a 50 price earnings ratio, which is extremely low for SpaceX, that's $1 trillion. That's $1 trillion in valuation. Let's skip this. So here's a quick overview. Base 2027 EBIT is 20 billion. The bull case would be 40 billion. That's not going to happen in my opinion. It's roughly 6 billion in EBIT per added gigawatt. Okay. And this is an important point. What we're doing here also subsidizes, of course, because this is basically the EBIT on the entire thing, on the entire compute cluster. It means that we have a massive subsidy, roughly $40 billion a year, let that sink in, for Grok and Cursor. So this whole thing not only makes SpaceX a lot of money, it also subsidizes and offsets the costs for their own training, because we are assuming here they're only leasing out 50% of this entire thing. That's the basis here. They're keeping 50% for themselves of the entire compute. They would be the biggest compute training cluster in the world, of course. that is used solely for training and maybe inference. So it kind of subsidizes Grok, and that could give them a very decisive advantage, a massively decisive advantage. Now let's get to the most important thing that everyone wants to know. What does that mean for the stock? And we take a rational approach here. We basically take the EBIT, right, the compute edit. This is only the compute sector. This is not Starship. This is not Starlink. This is not Grok, even though I don't think Grok will contribute too much to earnings. We will see. Cursor, we will see. We will see how much they can contribute. I mean, they're potentially growing fast, but product, I don't know how strong they are in converting this into revenue. That's like the unknown, right? How much can they actually add? But what we see here is we have 3 columns here to compute potential stock price impact. This is based on the SpaceX share price, the bull case, the base case, and the bear case for 2027 forward earnings, and how much would be added to the share price based on different multiples. If you say SpaceX will be valued as NVIDIA is currently valued, you get this column. If you say SpaceX will be valued as Amazon is valued, nearly the same, it's the next column. But if you say SpaceX will be valued as Tesla is being valued, which is, by the way, not likely that they get there, because Tesla is a little high on the PE side, that's the third column. And that already tells you the problem here. Why I'm not, well, I'm actually playing earnings. I think they will surprise to the upside because the analysts don't have that on the agenda. And these are significant things. But I'm not putting on a big play. I'm selling short puts to see how it goes. I think SpaceX goes up. I have 100 strike price short puts. Not a crazy deal, right? If this thing drops to 90 or something, I'm not getting hurt a lot. Or if it drops to 80. So it's not a giant trade because my conviction is not too high, because I believe the market simply doesn't know how to value the stock yet. And I think we need to wait after earnings, and then more importantly, after end of the week, to see how the unlock plays out, and then wait until end of next week because the unlock will play out more. So we have earnings and then unlocking a lot of shares that can get into the market and be sold. We have to observe the stock, and after end of next week, I think we will know much more where the stock is going. If fundamental valuation of the company is never really possible if you have no idea how the market actually wants to value this thing. Is it closer to a Tesla valuation, or is it closer to an NVIDIA valuation? Or maybe it's closer to a Micron valuation, but that's very unlikely. I think we can say with certainty SpaceX will be valued way above NVIDIA on a multiple level and way below Tesla. But what does it mean, right? Is it 40, 50 PE? Is it 70 PE? Is it 100 PE? Is it 120 PE? That is what no one knows, and that's what we have to figure out. Now, the long-term case is a whole different case, but we can't invest in stocks too long-term if the next 2 years have so much happening. But as you can see, the base case, and the base case is likely to happen. The base case alone is likely to add between, let's say, $50. I mean, Tesla is a little crazy. Let's divide this by 3. So let's say it's 100x. The base case forward 2027 compute. This is a realistic case that I presented here. Between $50 and this divided by 3. So let's say 150. Between 50 and $150 added to the stock once you understand this compute game, or contained in the stock. Then you have to decide, well, currently the stock is at 120. We can look where the stock is. The stock is at 120. Oh, it's dropping again. Was up, now it's dropping. The stock is 100 at 120. How much of this forward-looking compute piece of the stock between 150 and 50 is already contained? And that gives you a more realistic take on the whole situation, right? If we can say with certainty, let's just decide what the multiple is. I would say the multiple is probably, we can assume, at a minimum twice as high as Amazon because there's so much fantasy in this thing. It's at least 60, maybe it's 90. So it's between you know, between 100 and 150. That's actually significant, right? Between $100 and $150 of the stock price is the compute case alone. And I would maybe be a little conservative. Let's say 60 at an like not 60. Let's say 100 of the stock price at an absolute minimum, 100 at a 60 price earnings ratio, $100 per share is the compute case for 2027. The realistic base case. Okay, if $100 of the shares are the compute case and the shares are at $117, that thing is undervalued. Because the entire rest of the business is definitely worth more than $16, much more. So Starlink alone, right? Why am I doing this analysis? What was so important? Because I wanted to show you guys, if you do actually rigorous research on this whole thing and put it all into numbers, you see that the 8 gigawatts are total bogus. It's very likely to be a third of that. But even if it's just a third of it, you are talking about $50 to $100, very likely $100 in share price that just comes from a pretty realistic price earnings ratio on just the hard earnings that are coming in next year. And that means it is very attractive here. I'm still not going too deep into the stock because we have to wait what the tactical and mechanical unlock is for the stock, what the effect of all these share unlocks is, because even if it's super undervalued right now, knowing that all these unlocks come, and these are mechanical selling pressures, you can't help it. It doesn't matter if it's stupid or not. It will happen. That is why I'm saying I'm getting very greedy. I want to listen in the earnings call anything. I want to hear anything that supports or not supports my base case. What's the compute build out look like? And then I want to observe on Thursday, on Friday, and all the way next week. How does the selling pressure affect the stock? There will be more unlock waves, but if this wave is like a nothing burger, we know what happens. If this wave drops the stock to 80, we know it's serious. So we have, in my opinion, if you're rational, you take away two things. There is massive upside potential in the stock. If they just, and on a very fundamental level, if they just deliver this compute, which they're absolutely on track of doing. It requires tremendous execution, but they can do that. 8 gigawatt is bogus, but if they deliver 2.5 gigawatts by the end, or 2.8 gigawatts by the end of next year, boom, you're talking about $100 more in the stock. Well, maybe not more, but $100 of that stock would just be the compute, whatever that exactly means. But it's something significantly more than now. And that's conservative. And then we want to see what the unlocks do over the next 2 weeks to kind of get a measure and metrify a little bit how bad these unlocks are or how not bad they are. I have no idea. I want to see it. And then finally, tonight, we want to listen in to the earnings call. Do we get more pieces of evidence for the compute build out that are actually robust and reliable? If Elon says, oh, we have 200 gigawatts by end of the year, that doesn't mean anything. We need specific information about what's happening. So that is the case. That is the SpaceX case as it presents itself to us right now. It's a super exciting time. And this doesn't even go into the space compute satellites, which will be a huge upside surprise, but not now, not by the end of the year, and not even by mid of next year. It will take a little bit of time before this comes into play. That makes me super bullish on a strategic level beyond 2 years. But for now, we have to stick to these numbers. So let's see what you guys think and go into the comments and discuss this a little bit. You know, I like these pre-earnings calls because post-earnings calls, who even cares? You want to know things before they happen, or at least I want to know before they happen what actually happens. Let's see. Do we get the comments here? Comments. Yes. Unlock is not happening due to current share price. I totally disagree. Ether, you have to understand this unlock. A lot of people are saying, also Alexandra Mertz, for example, said, oh, don't worry, Joe, there's this giant unlock, but no one's going to sell. The stock is too low. You have to understand how this works. This is majority employees. The employees probably are not that rich. Many of them are not that rich. Okay, they unlock all their shares. They go to a wealth advisor, and the wealth advisor says, okay, how much money do you have? They say, I have 3 million bucks. Okay, how did you invest them? It's like, well, actually, I'm super poor. I'm just an electrician or something. I just got 3 million bucks from SpaceX. It's 100% in SpaceX. And then the advisor says, sell whatever, 50% of that stuff. And I say, no, I like it. Well, then sell 20. You have to, otherwise you're mad. No one is interested in the share price. You need to diversify. If your entire net worth is in SpaceX, every wealth advisor will say you need to get out now, out of a chunk. So there is selling pressure. So let's see. Let's go up here. Endo says, hey, Kevin Brown, I need Tesla to go up. Well, everyone needs Tesla to go up. SpaceX stock is going to rebound to 200 by end of the year. Maybe. Correct says, at what price would you find SpaceX to attract an attractive buy, and how likely do you think it will reach this price? As I said, for me, it's not a price. Down here, it is interesting, but it is a timeline, not a price, as I explained. I want to wait 2 more weeks. Then I have a much better understanding how the stock reacts to unlocks and how the earnings went and how the market reacts to the earnings. And our model will have much more evidence directly from the company. Is SpaceX short about to short squeeze? I don't know how much. I didn't check the short interest. I don't think people are too short SpaceX. That would be mad down here. And I don't like to play these short-term things. We need to look at the 3-year tech hop Elon is planning for. By then, OpenAI probably will have gone, maybe Oracle too, SPVs will have unwound, and the world will be ready for affordable tokens. Maybe. What do you say about the 32% short of the SpaceX float? I have to check that if that's still the case. That would be, these shorts are crazy people. I don't know what's wrong with them. I would not short SpaceX down here. Are you still only going to buy SpaceX after the majority of the share unlocks? Are you more bullish? I'm more bullish now, but I'm not ready to buy. I'm more bullish now because the stock is down so much. We will know much more in 2 weeks. We will know how they react to this, to the unlocks, and we know many things. Festung, 78, Grüße aus Bayern. Joe proving on this rec that not all Germans are idiots. Thank you. I approve of that message. Palantir plus 21%. You mean today? I didn't check. Will Gwen take the earnings call of Philip? I'm pretty sure Gwen, but let's see. Push the like button. Absolutely. After watching this, it's hard to not just buy NVIDIA. Well, I think you should buy NVIDIA. That's what I'm doing. Here, not financial advice, but what would be your rough estimate price projection of SpaceX share in 2030? I don't have that yet. We are working on it, but higher than now, much higher. They said due to stock's current price, 400 million shares will not be unlocked. What? They can't just change that. Is that true, Ether? Let me check that out with Grok or ChatGPT. If that is actually true, that would be crazy that we don't have that unlock, that this is rules-based. Is it true that August 6th share unlock doesn't happen if share price is too low? I cannot imagine that, but let's see. Here, Fukua International says, I will get onto Pioneer Lands in a day or two. You have to. You definitely have to join Pioneer Lands. It's, by the way, free. There are paid tiers, but the free one is also great. And you can talk to people. You can talk to me. It's very good. Here, the August 6 base unlock still happens regardless of the share price. Roughly 911 million shares, representing about 20% of the locked shares, become eligible for sale on the second trading day after earnings. The stock below the IPO price does not cancel this change. Okay, the additional price contingent unlock does not happen at the current price. Another approximately 455 million shares could unlock early only if the stock traded at or above 175. But that is early, right? When do the 411 unlock? So Ether, that's the information. It unlocks 911 shares, but the 455 million are not getting unlocked unless it is above 175 after earnings. Have you seen James 13 e.g. Marvel and Alap? No. So the 411 that don't unlock unless the price is 175 or higher unlock December 8th. Big SpaceX sale coming in just a couple of days. Yes, I know. Ether says, I like your content better. I like that you are not that emotionally attached and can walk away. Don't tell this to my girlfriend. But yes, you have to, you're not in a marriage with stocks, right? You have to analyze them and be rational. I'm a fan of Tesla right now because I think they have great things ahead and, you know, are totally undervalued. I am a fan of SpaceX, but we need to be rational about it. And right now, it's not the time to buy, in my opinion. SpaceX and Tesla will be more correlated together going forward. If Elon doesn't execute on one, then Wall Street will also lose faith in him. We will see. That could happen. Talk about Palantir and Micron. Is Micron up? Micron is ridiculously undervalued. I don't understand what people don't understand about this. Micron should be up a lot today. See, Micron is up randomly 5% because it's like, I over positioned myself. It's not a rookie mistake. It's actually a mistake everyone does all the time. But I am determined to rein in my last little weakness when it comes to these things. Position sizing was too large for Micron. That's why I got not squeezed out, but de-risked out. I needed to take some of the tables, so that trade was not great. I think it's like maybe I lost a little bit on it, even though I was completely right because I oversized the position. And then if it drops to 711, you need to de-risk. But this stock has, I mean, it's like the biggest forcing function ever. This thing goes to 2000. There's just no way around it. You just have to be cautious because clearly people are nuts about this stock. So this can also drop to 600 in between for absolutely no reason. You have to be cautious. But Micron is the most undervalued stock ever because people don't understand. People say it's still cyclical, the memory business. No one cares if it's cyclical. What we care about is what is the cycle? Okay, and now Apple and all these people come out and want to be on device, edge AI. They all need Micron. There is extraordinary demand for Micron. Palantir up like crazy, but also Palantir was totally oversold. Same story, right? People think, oh, it's up 23%. No, you have to look the big picture. This got completely oversold, right? Of course, Palantir is a strong company, and then here this is just completely ridiculous. So don't look at the individual days, look at the big picture. These are mega bullish AI stocks, Micron and Palantir, and they're currently completely oversold, or Palantir was, now it's up a lot. But Micron is still ridiculous. Video Tao, very good channel. Thanks for sharing. Well, you're welcome. We put some work into our analysis. and we'll make it available on pioneerlands.org. Marvel about 10%, yes. How to understand the sizing of position. I thought about like doing a video on this because this is very advanced stuff, but okay. So I shared something on X about it. Maybe I should do a video because it's so fundamental and it's not even complicated in a way, the meta principle. Look about it like this. If you do a trade, in simple terms, let's talk about trades, even though it also applies to investments, but trades make it more clear. If you do a trade and you have an edge means you do your trade and you're better than 50%. So if you do 100 trades and you have an edge of 70%, 70% of your trades win. Let's assume you have simple trades. You put your aggressive put and call options trades. If you're right, you get money. If you're wrong, you lose all your money. To make it simple, it's also true for all other situations, but this is the extreme case that makes it simple to understand. Let's assume you are 70% of the time right, which is extremely high. You are never getting there probably. And let's assume, to make the math simple, your position size is 100%. You're always betting everything. Let's say you get lucky the first 7 times. You do 10 trades. The first 7 times, you get your 70%. You get all right. Because you make 10 trades, 3 wrong, 7 right. But even if you're front loaded and make the first 7 right, you double your money, double it again, double it again, double it again. So you're like a billionaire. But since you're always having position sizing of 100%, all it takes is one time being wrong and you lose your entire money. You can make a gazillion %, but if you lose once, you lose all your money. And that's like an intuitive way of understanding position size. If you, for example, the old thing, if you have 100,000, you do a trade, you make 100%, you have 200,000. But then you do another trade, you lose only 50%, you're back to 100,000. So the larger the position sizes of each trade, the more you have a problem when it goes wrong. And the more it eats up your edge. Right? If you have position size of 50%, your edge needs to be extremely high. It's not enough to win 7 out of 10. Because every one you lose puts you so much back down that you get destroyed. The same is true if you have a small position size, the opposite is true. Then it doesn't matter. If you have a 1% position size, every trade you do is 1%. Even if you have a 55% edge, right? So you're 45% wrong, 55% right, you still actually make money in the end because the 1% doesn't matter and it reflects your edge. So the larger your position size, the less your edge gets reflected and the more negative it becomes. That's what most people completely don't understand. That's why position sizing is one of the magic keys of long-term success. Okay, enough of that. Micron is a victim of the OIA and SPV wobble. Everyone is watching everyone else like musical chairs. Yeah, but this doesn't change the fundamentals. So if you can survive, it's very good. What do you say about other SpaceX like Rocket Labs? We have to look into Rocket Labs. There will be, we will do this on Pioneer Lands now, building out the stock analysis part much more, coming very soon. We already have the roster, starting with Tesla and also putting the Tesla model in there. I like Rocket Labs on a qualitative level, but we have to check the share price. Last time I checked, it was too overvalued. But Rocket Labs definitely is a very good company. Here, I love your Q&A, even whilst in the middle of the night, East Coast Australia. Wow, Adam, you are a tough cookie. In Australia right now, I think it's very dark. Jonathan Rice says, do you need LiDAR to drive a car? You do it with just vision, so why can't a robot? Exactly. Okay, guys, let's wrap it up. That was fun. But now we know what's happening. Micron up like crazy. Now a little down. SpaceX, we conclude with SpaceX stock. Let's see, doing nothing. Tesla dropped a little bit. Now back up, not doing much. Very good. Pull back tomorrow. I don't know if they say if they say anything directionally into what I elaborated on, if they give more color and visibility into the build out, it will be good in my opinion. Okay, guys, thank you so much. Let's wrap it up and see you on the other side after earnings. It's gonna be interesting. Bye bye.